Did you know that the Reserve Bank of India was set up on 1st April 1935? Did you know the first governor was Osborne Smith? Did you know that the Reserve Bank of India has had 25 governors so far? And did you know that Manmohan Singh has a unique distinction of being the Reserve Bank of India governor, the Finance Minister of India, and the Prime Minister of India? Hello and welcome to another edition of Capital Calculus. I am your host Anil Padmanabhan. Little under a fortnight ago, the Reserve Bank of India celebrated its 90th anniversary, a remarkable milestone for any institution, especially for the country's central bank, which has had to constantly reinvent itself to adapt to India's changing economic needs. As a result, it has gone from being an institution that enabled development to a full service central bank. I mean by that a central bank which has been mandated to monitor and manage inflation in this country, over and above being an agency to raise the borrowings for central and state governments, as well as monitor and regulate the entire financial sector, among a host of other functions it does. What makes RBI tick? To understand this and more, I spoke to Indranil Sen Gupta. He's a former RBI staffer and presently head of research in India for CLSA. I began by asking Indranil on his first thoughts on RBI celebrating its 90th anniversary, especially given the fact that he was, after all, an RBI staffer.
I think it's a track record to be proud of. The RBI was born, of course, in 1935. And then, that was when the global recession was still a problem. Then, of course, there came the war, there came independence, the partition, and then, the 60s had their own sets of problems about poor harvests. Then came the twin oil shocks. The 80s saw the debt crisis in Latin America. The 90s, we ourselves, had to pledge our gold to get global support for our BOP crisis. And then, there was the whole move from a socialist economy to a market-oriented economy. The change in monetary policy then. Again, we had the dot South Asian crisis. Then we had the dot-com bust. As we recovered, there was the global great financial crisis, the COVID shock. So it's been one challenge after the other over the last 90 years. And I think the RBI can say that it's done a good job insulating the Indian economy to a large extent.
So that's a litany of economic and political shocks, and having
Yeah.
survived it all. So, what is this magic mantra that has enabled RBI to hang in there, as it were?
I think somewhere RBI, has had the good fortune of extremely erudite and dynamic governors, visionary governors. That's one. Secondly, I think that there has been a shared uh, patriotic purpose within the Reserve Bank. And thirdly, I think that there has been an honesty of that is not always seen within the Indian public sector, an honesty of purpose. So I think all the three have combined to create a fairly robust central bank, not just by emerging market standards, but also by you know any kind of global standards.
So, Indranil, there's a likeness to ISRO in many ways. They've also been like the Reserve Bank of India, outstanding institution. But it leadership is key, I guess. But there is also the staff, right? So how do you keep all of them so motivated, like you just said, very unlike other public sector institutions? What is it that makes them tick?
I can say that, at least the years I spent at the RBI, I was very conscious of the fact that I was working for a special institution, that my work had a meaning, a wider meaning from a national perspective. So I think that's something that uh, helped to put in very long hours, even weekends, into the job.
See, now just tracing the history, you just captured it very briefly. But broadly, the RBI has gone from being a developmental institution, or rather development banking, to one of a full service central bank today. So, can how was this evolution effected? It couldn't have been overnight, right?
So I think that a lot of this responded to the needs of the time. Uh, the RBI obviously began, like all central banks, as the manager, the banker to the government, the banker to banks, and the lender of the last resort. Now, once we had independence and the 5-year plan started, the government looked to the central bank to, fund its priorities, directly and indirectly. Uh, I think by the 80s, it was becoming clear that, uh, you know, funding wider uh, fiscal deficits was actually feeding inflation rather than growth. And therefore, out of that was born the Chakravarti Committee, which, set out monetary reforms. And then I think there came 1991, and there were two extraordinarily brilliant and visionary governors, Dr. Rangarajan and Dr. Jalan, who helped to steer this transition from development banking to a much more market oriented policy. Dr. Rangarajan, of course, saw the birth of that shift, if you like. And I think that, he had the full support of the then finance minister, Dr. Manmohan Singh. Dr. Jalan, I think, uh, came in and saw the South Asian crisis, then the dot com bust, and then built the edifice of what we call the India story. So I think that it was the sagacity of these two RBI governors which helped the RBI to steer course at that time.
So, Indranil, you mentioned the one problem area was the financing of the government's deficits. Uh, it is for the benefit of our viewers. Can you explain what was wrong with that means of funding the deficit as opposed to how it operates today?
So, the government began with the objective of capturing the commanding heights of the economy. At that time, there wasn't the scope of private investment, and it was believed that public investment would crowd in private investment. Now, as the government's requirements grew, the banking system was not able to fulfill them. Therefore, the RBI had to fund the government. Unfortunately, what happened is, as the RBI kept printing money to fund the government, and at the end of the day, inflation is too much money chasing too few goods, and that's precisely what happened. That we were not getting the supply response, for a variety of reasons. And so all this additional money that was being poured in by the RBI led to high inflation. So it's only in the 90s that the RBI first signed a memorandum with the government saying that, we will not automatically fund you, and in parallel began a process where the government, like anybody else, would have to borrow from the market at market oriented rates to put some discipline on the fisc. So that's the way things evolved. It was a gradual process. Initially it was part funding by the market, and then of course it moved to full funding. But in that process, we got market oriented monetary policy. I think in a way, uh, I would say that Dr. Rangarajan broke the back of demand side inflation in India in the late 90s. Uh, I mean, maybe that was at the cost of some recession, but the fact is that, inflation has not been a monetary phenomena in India ever since. There could be a oil shock, there could be a rain shock, which can bring in temporary inflation, but then inflation has never again been driven by monetary factors, as was the case prior to that.
Oh, fascinating. So basically, the monetary impact of inflation was netted out, and it is
Yes.
more of macroeconomic factors at
Yeah.
play, like you said, excess demand, shortfall in supply. Great. So, Indranil, has monetary policy and then fiscal policy struck a balance, say, over the last 2 decades? I'm referring also to the fiscal act, which capped the government's borrowings and now even the state government's borrowings. So, has it now struck the right balance?
I think, in a manner of speaking, yes. The act cannot be seen in isolation, right? I mean, there is the global economic cycle, and its mirror, the Indian economic cycle. So when you have high growth like you had in 2005 to 7 8, the economy is strong, tax collections are high, so the fiscal deficit comes down. It's easy to talk of fiscal discipline then. But you take the financial crisis, you take the COVID shock, when an outside shock comes and hits your economy, and tax collections fall, so the fiscal deficit rises, and that you have to uh, show some forbearance, because otherwise you only make matters worse, because there's a global shock and you're also killing domestic growth. So I think on the whole, uh, the government and the RBI have been partners in India's progress.
A key reform undertaken in the last decade has been the new law to solve for the vexing problem of insolvency.
I think it's a very important development, but I would also say that a large number of changes that were brought in after that, particularly during the time Mr. Goel was finance minister, have also played a role, because uh, I think there needed to be a wider timeline, uh, than there was, I think, in the original RBI circular, which was later, uh, replaced with yet another circular. So I think that's the way it goes, that you introduce something, you get feedback, you keep changing.
Indrani, looking ahead, how do you see the evolution of the Reserve Bank of India as a regulator and its general role in the Indian economy?
So I think that uh, the Reserve Bank obviously has this flexible inflation targeting mandate. So that is, I guess, the cornerstone of its, uh, you know, function. I think that from the time of Dr. Jalan, Dr. Reddy, and now Mr. Das, the Reserve Bank has built a large corpus of FX reserves, and this will stand India in very good stead as we go forward, because ultimately, uh, the only insurance you have against global shocks is is your FX reserves, and that is something that has got built. The financial sector obviously will keep changing and bringing new challenges. Now, I think India has an advantage of being the late mover, in the sense that it is in the West, it is the market which moves first, innovates. In India, the central bank sees that and then liberalizes to have let those innovations in, and so you are to some extent aware of whatever difficulties the markets, the central banks in other countries would have faced. So that's not a bad thing in a complex country like India. Uh, the biggest challenge, I think, for the RBI is the large number of banks, you know, commercial banks, cooperative banks, urban cooperative banks, and then the large number of NBFCs, and now the fintech companies. So there is that challenge of scale, which I think the RBI will have to fight as it goes forward.
But to its credit, the way they manage the digital, uh, say, currency, if you can call it that, the UPI or the digital mode of transaction, has been very impressive in the sense there has been no untoward disruption. It has gone on smoothly, and it has also pioneered financial inclusion in many ways, right?
Yes. So I agree with you. And, like I'm saying, that again, you have to innovate, right? Uh, the West, did credit cards. In Asia, whether it's in India or China, we went through a different route. So I think that's the uh, whole strength of the central bank in India, that it has always been able to look at the local challenges and react to the local challenges, rather than follow some textbook from somewhere else.
Indranil is right. The Reserve Bank of India has carved its own path. As a result, it has been able to adapt and deliver on India's unique needs. Regulating the financial sector is no mean task for a country of India's size. This is over and above the other tasks that it has been assigned. Barring for a few hiccups, especially some avoidable spats between some former governors and the then Union government, the Reserve Bank of India has done exceedingly well. But going forward, India's economy is going to become more complex as it grows many times over. So the task before the central bank is going to be that much more daunting. Thank you for watching. Don't forget to subscribe to StratNews Global on YouTube. Hit the bell icon so that you don't miss any updates. And please do share your thoughts, ideas and suggestions with us. I'm available on Twitter at Capital Calculus. I'll be back next week with another episode. Till then, stay safe.